everybody. My name is Allison Ostrander, and I am the Director of Risk Tolerance as well as an options specialist here at Simpler Trading. And in today's daily video, I wanted to go over the idea of a hedge trade to put on. I actually talked about this earlier in the week for those of you who might have caught the Facebook Live session or the YouTube recording. I talked about the idea of putting on a hedge insurance trade in SPX or butterfly, and I just wanted to revisit that idea, especially as we've seen the market kind of sell off the last few days. I know people are certainly concerned, is this going to be another downturn like we saw in March? Is it just a short fake out to test support levels? So I want to talk about the importance of putting on a hedge in your account and how to be able to risk balance that overall. Now, currently, I'm still overall bullish at this time in the markets, right? The trend itself is still technically bullish on the simple moving averages. We have started to break support, which makes me a little cautious, but momentum is still above the zero line currently. We don't quite have a bearish signal on the compound breakout tool. This is still more in line with consolidation. Today, we still held above 3,000, which I think is going to be a nice psychological level to see if we can continue to hold as support into next week and to the next few weeks, actually. And so I don't think it's necessarily going to fall apart here, right? But we know anything can happen in this market. And because of the whole coronavirus situation, because some of the states like Texas are taking a pause on reopening, it's always good to be mindful of how you balance out and allocate capital in your account. So for myself, I'm still mainly bullish my account, but I want to put a hedge out there to protect myself in case of a strong pullback. This doesn't mean I'm going to load up on contracts on a bearish style trade, right? I'm going to actually keep my contract risk very low, where the trade itself has a very low risk tolerance, but a very high profit potential. That way, if the market does really start to drop off, I have this trade out there as kind of protection against my bullish trades. And it's like insurance, right? It's the idea behind it is I don't mind if I take a complete loss on the trade, because if the market's bouncing up, if I take that loss, then I know my bullish trades are working out. They pay for the insurance. They still allow for an overall profit in the account, and I'm okay losing that capital. So much like insurance, right? You pay for it each month. You don't necessarily want to use it though, right? But it's there just in case. And that's exactly how this trade should be viewed. It's a very small capital risk trade, but it's there just in case the market starts to tumble, because if it does, it should help protect some of my bullish trades. It should certainly help protect my account, and ideally allow those trades to net out for break even, so I haven't really taken a loss in my account, or ideally maybe still allow me an overall profit, depending on how many contracts I do or how wide of the spread I make it. So in this case on SPX, what I would be looking at is a very wide wing butterfly going out to the July monthly expiration. This gives some time to allow the trade to work out, right? As a hedge trade, I can leave it out there for a little bit to allow that move down to potentially occur. And at the same time, it can be put further out of the money, which would allow for a very small risk, very high profit potential trade. So the area I want to place the midpoint of this butterfly currently is right around the 100 period simple for myself. So that's around 29.25, close to 2,900. So that will probably be right around the pin strike level that I want to put on for this hedge trade. So let's start with 2,900. That's a nice psychological level that we could certainly see the price go down to. And let's look at a 50-point butterfly. So 29.50 and 28.50 as the wings. As you can see here, currently the cost basis on this butterfly is about $2.60 out for the July expiration. And keep in mind, this is the July weekly expiration, right? It's technically the monthly expiration, but it's the one that settles at the close of market on Friday rather than at the open. And that just gives you a little bit more flexibility to trade it if you're holding it that long into expiration. That's the one I typically prefer going with. And as you can see on a 50-point spread, our cost basis is only $2.60. So it's a relatively small capital amount for the account. It's definitely a small capital amount when compared to the profit potential, which is $47.40. So it has an excellent risk versus reward on the trade, with the idea that if we do move lower, if we go down to the 100 period simple and test that, or we go down to 2900, right, we start to break that level, things are starting to move lower, then we can look to at least take some sort of profit on this trade, even if this happens next week, which I'm not anticipating at all. But even if it happens sooner, like next week, we could look to take a profit on this trade and then either reposition our hedge trade, right, our insurance trade with lower strikes, or maybe retake a look at our account if things are really starting to sell off and determine whether or not we want to balance it out a bit more with bullish and bearish trade ideas, and look at something like that. So I like this trade for a potential move lower. Let's say you have a really small account. You don't want to put this much capital into the trade. Well, if that's the case, you could do a similar idea, but do it on SPY, right? So you could still go out to the July monthly expiration, still go out roughly using those same strike levels, right? 2,900, 285, 290 and 295. Basically, if you just take off the 0 on SPX, that's the equivalent of the SPY strikes there. And we can see the cost basis is about 26 cents, right? Very inexpensive. It allows for a 474 profit potential. So even if you have a smaller account, you could look at something like this. If you wanted to build your contract amount into the trade, right? Make sure it's even, of course, on the butterfly, 1-to-1 ratio. So here 242 or 363. But you can see even on, let's say, 4 contracts, I'm looking at about 100, a little bit above that, 104 capital risk, but at 1,896 profit potential. So if you have a smaller account and this makes more sense, you could look at doing this on SPY for a fraction of the cost if you wanted to. Either way, the idea here is to keep your overall risk tolerance still really low, still easily able to be made up by some profits, just, ideally within a week or within a couple weeks, depending on how many trades you have on and how many contracts you do of the hedge trade, but to allow for an excellent profit potential. So if the market really starts to dump, right, if it really starts to sell off, then you still have a nice profit out there that you can take and help offset some of those bullish trade ideas that might be hurting. So I wanted to go over this idea again, like I mentioned, especially because we started to sell off some. I know I got a lot of questions about it in the trading room today. So I think these are both great hedge trades to consider. Once again, though, guys, I cannot make clear enough, this is not a trade to load your account in, right? It is insurance. The idea is you don't necessarily want the trade to work out, right? You're okay taking the small loss and netting it against your other profits in your account. The idea, though, is if the market dumps, you have some protection out there to the downside for that move to occur. So we'll definitely be talking about risk in my upcoming class tomorrow, which I'm really looking forward to. I'm excited to see y'all guys in there. And if for some reason you feel like you don't know about the class, maybe you haven't heard about it and it's something you might be interested in the summary for this video, I will provide a free link to the webinar I did earlier this week, which introduces some of the topics I'll be talking about in the class tomorrow coming up. So I hope to see you guys there, and if I don't, I look forward to talking to y'all next week. Bye.